Europe's energy strategy has undergone significant changes over the years, with its long-standing reliance on Russian gas pipelines and American LNG to meet its ever-growing demand. However, recent geopolitical events have thrown that strategy into turmoil, leaving Europe searching for alternative sources of energy. In a bold move toward diversification and energy security, Europe is quietly exploring a substantial LNG deal with Canada, one that is already creating waves in the global energy markets and reshaping future trade routes. This deal represents more than just a shift in supply. It's a pivotal moment that is poised to redefine the global energy landscape. For Europe, this move is about securing a stable and diversified energy future. For Canada, it is an opportunity to reshape its role in global energy markets. And for the United States, it's a wake-up call, signaling a new competitor in an increasingly competitive LNG market. This isn't just about LNG, it's about shifting the balance of global energy politics. Until recently, Europe's reliance on US LNG seemed secure. However, rising prices, restrictive trade terms, and ongoing political tensions have left European leaders scrambling to find alternatives. This has created an opening for Canada, a country with vast natural gas reserves and political stability, reducing the risk of supply disruptions. Canada's proximity to Europe and the recent improvements in its energy infrastructure, particularly along its coasts, have made it a serious contender in the LNG market. Canada's entry into the LNG market isn't just a solution to Europe's immediate energy challenges. It represents a long-term strategy to diversify Europe's energy sources, moving away from over-reliance on any one supplier. Historically, Europe learned hard lessons by depending too heavily on Russia, then the US, for its energy needs. The instability of these relationships has made it clear that sustainability in energy supply depends on diversification. Canada offers a fresh and reliable alternative in an energy market that is rapidly evolving. One of the flagship LNG projects in Canada is LNG Canada, which is already under construction in British Columbia. This project, among others, is expected to become a major supplier for global markets, and Canada's political stability and reliable energy infrastructure make it an attractive partner for Europe. Quebec, in particular, has begun rethinking its LNG policies, potentially opening the door for more export projects. Energy giants, including Total Energies, are pushing for faster development in Canada, recognizing the long-term potential in this new energy landscape. The shift toward Canadian LNG is not just about Europe securing its energy future. It's about creating a more diverse global LNG market. As competition increases, the United States, which has been Europe's top LNG supplier, finds itself facing a new competitor it wasn't prepared for. Lower transport costs from Canada's East Coast terminals give it an edge, and European buyers, eager to diversify their sources, are starting to reconsider their reliance on US LNG. This new dynamic is pushing US LNG exporters to renegotiate long-term contracts to remain competitive. For Europe, energy diversification has become a necessity. With Russia's gas cutoff and the uncertainty surrounding US LNG supplies, Europe is keen on securing a third pillar of energy security. Canadian LNG offers an essential solution, ensuring that Europe doesn't remain dependent on a single source of supply. This strategy goes beyond just supply security. It's about ensuring flexibility, reliability, and long-term stability in energy deals. European buyers are increasingly seeking flexibility in their LNG contracts, preferring those that allow access to the spot market instead of being locked into rigid long-term agreements. This preference aligns with Canada's potential to offer flexible and reliable supply, particularly given the stable political environment in Canada. Canada's growing reputation as a politically stable, resource-rich country makes it a highly attractive option for European energy companies. The expansion of infrastructure in Europe to accommodate Canadian LNG, including increased storage capacity and improved pipeline networks, further strengthens the case for Canadian LNG. If Canada is to meet Europe's growing demand for LNG, however, it will need to expand its own energy infrastructure. The Trans Mountain pipeline expansion in Canada tripled capacity for oil exports, and similar infrastructure upgrades will be needed for LNG. New export terminals on the East Coast are already in the planning stages, though regulatory challenges and environmental concerns may slow progress. But partnerships with global energy giants are helping to fast-track some of these projects. If Canada can overcome these hurdles, it will solidify its position as a major player in the global LNG market. Meanwhile, China's growing energy needs and its shifting dependence away from Middle Eastern gas make Canadian LNG an appealing option for the Asian giant. China is investing heavily in upgrading its refineries, and Canadian LNG could fit perfectly into that strategy. New trade partnerships with both Europe and Asia would significantly enhance Canada's global energy footprint, allowing it to tap into both European and Asian markets simultaneously. The potential deal between Canada and Europe isn't just about meeting short-term energy demands. It's part of a broader strategy to build a more resilient energy network for the future. In the coming years, Europe may look to expand LNG storage capacity across key hubs and integrate Canadian LNG into broader renewable energy strategies. Collaborative joint ventures with Canadian companies could secure long-term supply contracts for Europe, making this relationship one that goes beyond just energy supply. It's about building sustainable, long-lasting partnerships. On a global scale, this potential deal highlights a larger trend as nations compete for dominance in the LNG market. The United States, while still a dominant force, is facing increasing competition from Canada, which is positioning itself as a major global player. Meanwhile, Russia's pivot toward China has reduced its influence in Europe, but increased its power in Asia, further reshaping the global energy landscape. Middle Eastern suppliers are also adapting to these changes, offering discounts and long-term agreements to maintain European interest. The energy trade war is just beginning, and Canada's entry into this market is adding a new twist to an already complex geopolitical and economic battle. Already, major players in the energy sector are reassessing their strategies in light of Canada's growing role. OPEC nations are concerned about losing market share in Europe, while South American gas exporters are eyeing new opportunities as Europe diversifies its sources. Energy traders are adjusting their forecasts to reflect Canada's increasing influence in global markets. If Canada's LNG deal with Europe comes to fruition, it could solidify Canada's position as a top-tier LNG supplier, rivaling established giants like Qatar, the US, and Australia. Canada's growing reputation for reliability and stability will be critical as it negotiates new deals across both Europe and Asia. Investment in energy infrastructure will not only help Canada attract more international partners, but will also give its economy a significant boost. The country's rising global influence will allow it to play a pivotal role in future energy security discussions, ensuring that it remains a key player in global energy markets for years to come. However, this transformation won't happen overnight. There are still obstacles to overcome, particularly in terms of infrastructure development and environmental concerns. Protests in Quebec and British Columbia highlight the environmental impact of LNG projects, and balancing economic growth with environmental responsibility will be crucial. Canada will need to navigate these challenges carefully to maintain its environmental commitments while capitalizing on the economic benefits of its LNG projects. Despite these hurdles, the potential LNG deal between Canada and Europe represents a paradigm shift in the global energy landscape. It could reshape trade routes, influence geopolitical alliances, and redefine the role of energy suppliers worldwide. The competition for control over LNG supply routes is intensifying, and Canada's emergence as a key player is a game-changer. For Europe, securing Canadian LNG means not only energy diversification, but also the opportunity to build stronger ties with Canada, positioning itself for a more resilient future. For Canada, this deal opens up access to new markets, enhances its global influence, and strengthens its position as a top-tier LNG supplier. As new shipping corridors emerge, Canada will be well-positioned to dominate both the Pacific and Atlantic corridors, allowing it to tap into both Asian and European markets. This isn't just about exporting LNG. It's about reshaping global trade routes and establishing Canada as a central player in energy logistics. The expansion of LNG terminals on Canada's east coast will unlock new shipping routes, making it easier to export LNG to Europe and Asia. Competition among global energy suppliers is heating up, and control over these shipping routes will play a critical role in determining future energy market dominance. The European race for LNG is not just about securing energy supplies. It's also about forging new alliances and reshaping the geopolitical landscape. Germany, France, and other European nations are already pushing hard to secure long-term Canadian LNG contracts, with the goal of reducing their dependence on US and Middle Eastern gas. Eastern European nations, traditionally reliant on Russian gas, are eager to bring Canadian LNG into their supply chains to diversify their energy sources. For the United Kingdom, the post-Brexit landscape means a different path. The UK is negotiating separately, looking to maintain its energy independence while securing the best deals for its future. This shift in energy dynamics is about more than just securing energy. It's about redefining Europe's geopolitical alliances and positioning itself for a future that is less reliant on any single energy supplier. Canada's growing role in global energy markets is also reshaping its diplomatic standing. Stronger ties with Europe will open new doors for collaboration on infrastructure and climate policies. New trade partnerships with emerging markets like India and Southeast Asia will further diversify Canada's trade portfolio, strengthening its position on the global stage. The entry of Canadian LNG into the global market could mark a pivotal moment in the energy sector, reshaping the future of global energy security. Tensions between the US and Canada could rise as Canada competes for LNG contracts in Europe, shifting the balance of North American trade. The competition for energy dominance is intensifying, and Canada is at the center of this transformation. If Canada's LNG projects continue to gain momentum, they could reshape the global energy market for generations to come. Ultimately, the future of the energy market is uncertain, but one thing is clear. Canada is no longer just a regional player. Its entry into the LNG market has the potential to change everything: global trade, energy security, and the balance of geopolitical power. Canada's LNG expansion is not just about meeting the energy needs of Europe. It's about securing a leading role in the future of global energy. The shifting dynamics of global energy markets are reshaping the way nations approach energy security, and Canada is stepping into a crucial role. Will this LNG deal materialize? Will Canada's rise as a global LNG supplier change the game? Stay tuned, because the energy world is about to undergo a seismic shift.